How war will change the crypto world. You probably realize this, but with Russia and Ukraine at war and no one really sure whose fault it is or even who to root for, we have to consider lots of ways that this conflict might change our lives. Of all the areas of existence that could be affected by the war between the two countries, cryptocurrency is one we will be able to clearly track any negative effects on. The charts are literally there for that. But if you dig a little deeper, there are other ways that we can see how war will change the crypto world. Let's take a look at the various things we can expect. Cryptocurrency has already had a pretty tumultuous time of things lately, and several aspects of it have been associated with the war that has begun in Ukraine after Russia invaded. Now, whether you think Putin is a maniac or that NATO is a threat to Russian security, or if you buy into rumors of biolabs and corruption, you can't argue that the conflict is going to affect financial situation for any currency in the world, but most of all, cryptocurrency. The global financial implications are one of the many things that are affected by the war. There is, of course, a cost of human life, as with any war. As the Ukrainian people flee their country or prepare to defend their homes against Russian soldiers and attacks, volatility in the global financial markets is absolutely on the cards, and there's not really a lot that anyone can do about it. Doug Boneparth, a certified financial planner and founder of Bonafide Wealth, says that regardless of asset class, there's a tremendous amount of volatility that comes with war. It's going to make it that much more difficult for investors to stick to their strategies. This is a very valid point, and one that we saw begin to take place back in January, even before the invasion had officially begun. Back then, just after the new year, Bitcoin fell spectacularly, sinking below $35,000 a coin, with Ethereum experiencing a severe drop too, down to $2,400. Both coins then suffered almost 50% losses. But it wasn't just those two biggest cryptocurrencies that saw this kind of drop. Dogecoin, Solana, and Shiba Inu coin, to name just a few, all suffered the same kind of drops, with the latter falling from 40 millionths of a dollar to just 20 in no time flat. The geopolitical tensions in Europe, not to mention the vast inflation caused by massive interest rate hikes by the US Federal Reserve, were all factors in this event occurring. Almost as though no one told Joe Biden that if you flood the country with extra money, prices will shoot up incredibly quickly. However, with no signs of any end to the conflict that Biden described as an act of war committed by Russian President Vladimir Putin, many experts have looked at the cryptocurrency space and warned investors that they should be prepared for a longer-term period of uncertainty and volatility ahead. Investors had been advised to stick on their courses and develop long-term strategy, and crypto experts are doing their best to stop people from panicking. Experts are paying attention to the ways that Russia's invasion of Ukraine has thumped riskier assets, while the usual safe havens of gold and the almighty dollar are actually trading higher. This isn't the best news for crypto investors, but many are saying that Bitcoin could constitute a safe asset. However, the case of Bitcoin's being safe is getting weaker after the massive volatility that occurred at the start of the year. Ben McMillan, the chief investment officer of IDX Digital Assets, says that if Bitcoin wants to experience a sustained rally that takes it past $45,000 again, it would require a return of investor risk appetite across asset classes, which, for the time being, looks like it will be largely determined by the unfolding of events in Ukraine. Even though crypto has been advocated as an unconnected asset that is separate from traditional financial markets, Boneparth says that the market is behaving similarly to the stock market in the wake of the invasion. My first observation is something that we've observed before, which is that crypto, specifically Bitcoin and Ethereum, are risk-on assets. They're going up and down just like equities do. You watch stocks sell off overnight and throughout the day to day, and you're watching crypto pretty much do the same thing, says Boneparth. His view is that investors will have to steel themselves and deduce whether we've been witnessing a knee-jerk reaction or a long-term downturn. Since that period of volatility, the market has recovered somewhat, though not as vigorously as many might have hoped. The main change is that there's been a lot more mainstream adoption of crypto. Laura Shin, author of The Kryptonians, Idealism, Greed, Lies, and the Marking of the First Big Cryptocurrency Craze, says that the thing to watch out for is whether the crypto diehards and more macro-driven folks drive the narrative, and whether the crypto traders in leveraged positions get wiped out and drag the markets down with them. Most agree that the reaction to these events and their effect on the crypto market is pretty normal, because there was already a slight decline in the past few months, with so many things being uncertain at the moment all over the world. While we seem to have finally passed through the overblown pandemic of the last couple of years, the socio-political culture war that seems to be happening, as well as the actual war in Ukraine, have left many wondering what kind of place the world will be by the year's end. People in that frame of mind don't usually behave bullishly when it comes to investments. Since cryptocurrencies are highly volatile assets, and since this has only increased since Russia's invasion of Ukraine, the experts are advising that smart investors should hold on, stay calm, and try to avoid knee-jerk reactions to changes on the market. They should instead stick to their long-term investment plans. And if you don't have a plan for your investments, Bone Parth recommends that you make a plan ASAP. Be careful not to make financial mistakes that you'll regret down the road, because you either panicked or couldn't handle the volatility that's taking place. Your ability to stay disciplined and stay invested is ultimately what will lead to success or failure, the expert advises. The volatility of crypto is a scary thing to many investors, which is why most experts advise that sticking to the big two, Bitcoin and Ethereum, is most likely the safest way to go. If you want to invest further, then pick the top altcoins and steer clear of the new kids on the block that are still untested and unproven. And of course, always make sure that you only invest what you can afford to lose, or simply stick to a pattern of making crypto no more than 5 to 10% of your total portfolio. Another thing that you can do to ensure that you can ride out the storm of war and uncertainty that is sweeping the planet right now is to make sure that when you're looking to buy and sell cryptocurrencies, you do so on reputable platforms. The mainstream high-volume cryptocurrency exchanges such as Kraken, Gemini, Coinbase, or of course Binance are the safest places to make sure that your investments are safe, as they comply with the constantly evolving federal and state regulations. Other than that, just remember that periods of uncertainty like this one tend to not last forever, and what follows is often a boom period. So the most important advice most people can give right now is to simply stay vigilant and hodl onto your assets. Are you feeling confident about your investments, or are you more likely to panic? Comment down below and hit that like button. For more vital information about the crypto economy, be sure to subscribe to Crypto World.